Welcome to the Opening Bell Report.
Okay, let's unpack this right out of the gate because the numbers we're looking at today are honestly kind of staggering.
Yeah, they really grab your attention immediately.
Right. Usually when you talk about software giants versus, up-and-comers, you expect a certain dynamic. The giant is slow and steady. The challenger is fast and maybe a bit messy. It's the classic narrative. But what we have on the table today is, well, something totally different. For this deep dive, we're looking at a new analysis report titled Figma versus Adobe, the Great Design Software Divergence. And the headline stat: Figma is currently growing its top line 4 times faster than Adobe.
4 times. It is a remarkable statistic. And you're right to point it out because we're talking about a 4x growth differential. That isn't just a rounding error. That is a completely different trajectory entirely.
4 times. And what makes this deep dive so fascinating for you listening is that we aren't just looking at a typical David versus Goliath story where the little guy gets lucky or finds some tiny niche.
No, not at all.
This analysis report argues that we are witnessing a fundamental structural shift in the entire design software sector. It's really a changing of the guard driven by architecture, strategy, and honestly, a total rethink of who is actually paying the bill.
Exactly. The report makes it incredibly clear this isn't just about Figma having a trendy quarter. It's about a massive divergence in business models. We are looking at the financial head-to-head, the architectural differences, which are huge, by the way, and the strategy that allowed Figma to just casually capture 95% of the Fortune 500.
Right, and that is our mission for this deep dive. We want to figure out why this divergence is happening. Is it just hype? Is it just because Figma is the shiny new toy?
Yeah, that's the big question.
Or is there something deeper in the actual plumbing of these companies? Because let's be honest, Adobe is Adobe. They own the creative space. Photoshop, Illustrator, these are literally verbs. It feels weird to think of them being outpaced this aggressively.
It does feel very counterintuitive. Adobe has been the default for decades. But if we connect this to the bigger picture, it's really a story of cloud native versus legacy desktop. The numbers in this analysis report reveal that being born in the browser matters a lot more than we might have previously thought.
Right.
It's not just a delivery method, it's a destiny.
Wow, okay. So let's get right into the financial tale of the tape, as the report calls it. I really want to hear the raw numbers. We said 4x faster, but what does that actually look like when you put the two balance sheets side by side?
So let's break it down. Adobe recently closed out its fiscal 2025, and by all accounts, it was a very solid year. They posted a 10.5% year-over-year revenue increase.
Okay.
Now, for a company of their size, we're talking about a massive, massive market cap here. That is respectable. It's steady. It's exactly what Wall Street likes to see from a mature company.
Right. I mean, 10% on billions of dollars is still billions of dollars. Nobody is crying over that.
Exactly. But then you look at Figma. In that same comparative period, Figma posted top-line growth of nearly 41%, specifically 40.96%.
Man, so nearly 41% versus 10.5%. That is a massive gap. But I have to ask the obvious question here.
Go for it.
Isn't it just easier to grow at 41% when you were smaller? It's the law of large numbers, right? Adobe is steering a giant cruise ship. Figma is driving a speedboat.
That is a completely fair point, and it's usually true, but the analysis report suggests this isn't just base effects, it's about momentum. Figma's growth is accelerating in areas where Adobe is basically hitting a ceiling.
Oh, interesting.
However, and this is where the nuance comes in, revenue growth isn't the only metric that matters. We have to look at profitability. And this is where the two companies are in very, very different phases of their life cycles.
Because Adobe is famous for being an absolute cash machine, right?
Absolutely. The report highlights that Adobe is in what we'd call harvest mode. Their free cash flow margin, which is basically the cold, hard cash they generate after all expenses, is over 40%.
That's wild.
That is incredible efficiency. They are printing money. They have optimized every single inch of that business to extract value.
Okay, so they are growing slower, but they are keeping a lot more of what they actually make.
Yeah.
That's the harvest concept. You plant the field once, and then you just keep reaping the crops year after year.
Precisely. Now, compare that to Figma. Figma's free cash flow margin is around 18%.
Okay.
Now, that is still positive, which is actually very impressive for a high-growth SaaS company. Usually, companies growing at 40% are burning cash like crazy, so Figma is profitable, but that 18% is obviously much lower than Adobe's 40%, and the report notes that this is completely intentional.
Intentional. Why wouldn't you want 40% margins if you could get them?
Because Figma is heavily reinvesting its cash flows to fuel that hypergrowth, they are spending heavily to expand their total addressable market, or TAM. They aren't trying to take profits home to the shareholders yet. They're trying to conquer more territory.
Got it. So Adobe is taking the profits to the bank, and Figma is pouring the profits right back into the engine to make the boat go faster.
That is the trade-off.
Mhm.
But here's where it gets really interesting, and I think this might be the most surprising part of the entire analysis report for you.
Get me.
It's the valuation, specifically the price-to-sales ratio. Usually, when you have a company growing at 41%, investors are willing to pay a massive premium for it compared to a company growing at 10%.
Right.
You would expect Figma to be much, much more expensive relative to its sales.
Yeah, high growth usually equals a high multiple. That's just
Mhm.
investing 101. You paid a premium for the future growth.
But according to this analysis, they are trading at remarkably similar multiples right now. Figma is trading at roughly 12.14 times sales. Adobe is trading around 11.0 times sales.
Wait, really? They're basically priced the same.
Almost identical. And that presents a very stark choice for an investor. You have to ask yourself, am I willing to pay roughly 11 or 12 times sales for a mature giant growing at 10%? Or do I pay essentially the exact same multiple for a challenger growing at 41%?
That is wild to think about. It's like being able to buy a brand new Ferrari for the same price as, well, a really nice, reliable sedan.
A very, very profitable sedan. But yes, the market pricing suggests that perhaps the growth differential isn't fully priced in yet, or that the market views the risks differently. Maybe they think Figma's growth is about to fall off a cliff, or maybe they think Adobe has some secret weapon coming. But structurally, just looking at the math, it looks like a glitch in the matrix.
So let's talk about why Figma is the Ferrari in this analogy. If the financials are just the result, what is the actual cause? The report lists 3 core drivers for this growth. The first one is architecture, and it specifically mentions the browser versus the desktop.
This is fundamental. It sounds a bit technical at first, but it is the root of literally everything else we're going to talk about.
Is it really just about where the software lives? Because Adobe has the Creative Cloud, right? I can save my stuff to the cloud. I can access my files from my laptop or my desktop. Isn't that enough?
You can save to the cloud, yes, but that is cloud storage, not cloud native. Adobe's architecture is deeply, deeply tied to individual desktop applications. You download Photoshop, you download Illustrator. These are heavy gigabyte-sized applications that have to run on your local processor.
Right, my laptop fan always spins up when I open them.
Exactly. The cloud part for Adobe is mostly just a hard drive in the sky where you put the files when you're done.
Okay, and Figma.
Figma was built from line one, from the ground up, for the browser. It runs in Chrome. It runs in Safari. This isn't just a back-end technical detail. It unlocks multiplayer.
Multiplayer, like a video game.
Exactly like a video game. Because Figma lives natively in the browser, it unlocks seamless multiplayer collaboration. It means a designer, a product manager, and a copywriter can all be in the exact same file at the exact same time.
Oh, yeah.
They're moving things around, leaving comments, and actually seeing each other's colored cursors zipping across the screen in real time.
I have actually seen that. It's chaotic, but also kind of magical. You don't have to email a file back and forth to see the changes.
Right. There is no version 1, version 2, version 2 final, version 2 final real. It is just the link. The URL is the single source of truth.
That is huge.
Contrast that with Adobe. Despite all their financial investment, their roots in the desktop create massive friction. You have to save the file, sync it, wait for the other person to download it, open it, hope they have the same exact fonts installed.
Oh, the missing fonts. The literal nightmare of my professional life.
Exactly. If you are in a remote or hybrid work environment, which most of us are today, that friction really adds up. Every time you have to sync or email, you lose momentum. Figma is frictionless.
So Adobe is like trying to collaborate by mailing a physical canvas back and forth across the country, and Figma is like painting on the same wall at the exact same time.
That is a great analogy. And that architectural difference is a huge reason why modern teams choose Figma. It just naturally fits how modern work happens. And the report emphasizes a key point: Adobe can't just patch this.
Really? Why not?
To get true multiplayer, they would effectively have to rebuild their core engines from scratch, which is incredibly difficult and risky when you have millions of legacy users depending on the current setup.
So it's a structural moat. Adobe is trapped by its own history.
In many ways, yes. It's the classic innovator's dilemma in action.
Okay, so that's the tech side. But the report mentions a second driver that I think is even more fascinating because it's about who is actually using the software. It's called expanding the user base, and it specifically focuses on something called dev mode.
This is where Figma goes from being a design tool to a full organizational tool. This is where the total addressable market just explodes.
Because traditionally, design software is for designers. If I run a company, I buy Photoshop licenses for the creative team. I don't buy it for the engineers or the accounting department.
Correct. Adobe sells to creatives. But Figma realized something crucial: designers don't work in a vacuum. They eventually have to hand their work off to developers,
Right.
the people who actually write the code to build the website or the app.
And that handoff is usually a nightmare. I have been there. The designer draws something beautiful in a mock-up, and the developer looks at it and says, I have no idea how to build this in CSS. Or they build it and it looks completely different from the picture.
Historically, yes. It is the valley of death for product development. It's where things get lost in translation. Figma introduced dev mode specifically to bridge that gap.
How does it work?
It gives developers a special interface within Figma where they can inspect the design, get the exact code snippets they need, whether that's CSS, iOS, Android, and understand exactly what to build without accidentally moving a button and breaking the design.
So they aren't just selling to the creative department anymore. They are actively selling to the engineering department.
Exactly. And think about the ratios in a corporate environment. In a typical tech company, how many designers are there compared to engineers?
Oh, usually way more engineers. Maybe one designer for every 8 or 10 developers.
Right. So if you are Adobe, you sell one license to the designer. That is your ceiling for that team. If you are Figma, you sell one license to the designer, and then you sell licenses or dev mode seats to those 10 engineers.
That makes total sense. You just multiplied your potential revenue per company by 10x without even creating a new product category.
You have significantly expanded your market. Adobe struggles to do this because their tools are so complex and specialized that a front-end developer doesn't want to open Photoshop just to check what size a font is. It's too heavy. It takes 5 minutes just to load the app. Figma makes it easy because it's just a browser link. So they have the browser architecture, they have the developers on board, but how do they actually get into these massive companies? Because big companies usually have super strict procurement processes. You can't just buy software willy-nilly and expense it. The report talks about core driver 3, that land and expand strategy.
This is the classic bottom-up adoption model, and Figma has completely mastered it. It's almost viral in how it spreads.
Tell me how that actually works on the ground.
It rarely starts with a massive multi-million-dollar contract signed by the CEO or the CIO. It starts as a free or low-cost tool used by a single frustrated team. Maybe even a single designer who's just tired of the old way of working. They whip out a personal credit card, pay $15 a month, and start working.
Ah, shadow IT, the CIO's worst nightmare.
Exactly. But it works. They start using it. Then they invite a colleague to collaborate, because remember, it's multiplayer. Then the product manager asks for a link to check the status. Then the developers get involved via dev mode.
All right.
Suddenly, that one rogue team is moving twice as fast as everyone else in the building.
And the virus spreads. Other teams see the speed and want in.
In a good way, yes. Once that team scales, Figma becomes the default ecosystem for that specific project. Eventually, the company realizes everyone is already using this tool. The CIO looks at the network dashboard and sees 500 people logging into Figma every day.
At which point they have no choice.
Right. At that point, they are essentially forced to adopt the paid enterprise tiers just to manage the security, the single sign-on, and the permissions.
It's like a Trojan horse, but the horse is just really good software that people actually enjoy using.
And the success rate of this strategy is staggering. The analysis report drops a massive statistic here. This exact strategy has allowed Figma to capture the infrastructure of 95% of the Fortune 500.
95%. That is basically everyone.
It is practically total saturation of the enterprise market. Now, that doesn't mean every single employee at every company uses it, but it means Figma has established a paid beachhead in almost every major corporation in America. That is the raw power of land and expand.
That is unbelievable market penetration. It really puts Adobe's position in perspective. Adobe has the legacy and the brand name, but Figma has the actual momentum inside the building.
It does, and this brings us perfectly to the lifecycle analysis section of the report. It categorizes Adobe and Figma into two very distinct phases of corporate existence.
Right, the harvest versus land distinction we touched on a bit earlier.
Yes, Adobe is firmly in the harvest phase. They have roughly $23.7 billion in annual revenue. They're massive. But because they are so big, they have effectively saturated their core market. Almost everyone on Earth who needs Photoshop already has Photoshop.
So how do they keep growing if everyone already has the product?
Well, the report notes that their growth now relies heavily on price increases and upselling new features to their existing user base. You see this heavily with their push into AI, like Adobe Firefly. They are essentially saying, hey, you already pay us for Creative Cloud, pay us a little more, and we will give you these cool generative AI tools.
Okay, so that's the harvest. You're just squeezing more juice out of the exact same orange you already have.
Correct. Contrast that with Figma. They are in the land phase. They are still rapidly acquiring net new logos, which means companies that have never paid them a dime before. And because of things like dev mode, they are entering entirely new user demographics. They aren't just squeezing existing customers, they are finding brand new ones.
It's a completely different energy. One is defending a castle, and the other is actively conquering new territory.
That is a very fair way to put it. And for an investor, or honestly even just an observer of the tech industry, it creates a fascinating dilemma.
Yeah, let's go back to that choice you mentioned earlier, the valuation dilemma. Because I'm still stuck on the fact that the market is pricing them exactly the same.
Right. You have two options. Option A is Adobe, the safe, highly profitable legacy giant. It's a cash machine, it's stable, but it's only growing at 10%. It is a known quantity.
The reliable sedan.
The reliable sedan. Option B is Figma, the disruptive challenger. It's debt-free, it's growing at 41%, and the math heavily favors growth-oriented portfolios.
Ferrari.
The Ferrari. And yet, the market is asking you to pay roughly the same price-to-sales multiple for both, about 11x for Adobe, 12x for Figma.
When you lay it out like that, it really does feel like a glitch. Why wouldn't everyone just buy the faster growth? Is it just fear of the unknown?
Well, markets are complex. People worry about durability. They worry about AI disrupting design entirely. Maybe we won't even need designers in 5 years if AI can just generate interfaces.
Yeah.
But the report argues that for growth-oriented portfolios, the math is incredibly compelling. Figma's aggressive top-line expansion is rapidly compressing its forward multiples.
Break that down for me, actually. Compressing forward multiples. What does that mean in plain English for the listener?
It means that because Figma is growing so incredibly fast, its revenue next year will be significantly higher than it is today. So if the stock price stays exactly the same, the price you are paying relative to that future sales number gets cheaper and cheaper very quickly.
Ah, I see. So you're paying for future performance, and Figma's future, at least based on these massive growth rates, arrives a lot faster than Adobe's.
Exactly. You are buying the slope of the curve, and Figma's slope is incredibly steep. With Adobe, because the growth is slower at 10%, that cheapness happens much, much slower. You have to wait a lot longer for the earnings to catch up to the price you paid today.
This has been a really eye-opening look at the mechanics behind these numbers. It's so easy to just see a stock ticker or a headline, but understanding the why, the browser architecture, the developer handoff, the viral sales strategy, that is where the real insight is.
Absolutely. And it shows that in modern software, the how you build it directly determines how fast you can grow. You simply can't separate the tech stack from the business model anymore.
So to quickly recap our deep dive today for everyone listening, Figma isn't just winning the growth game because they have cooler branding or a slicker interface. They are winning because they built a browser-first architecture that enables real-time multiplayer collaboration.
Right.
They are winning because they break out of the traditional design silo and capture the engineering departments with dev mode, expanding their market 10x.
Huge driver.
And they are winning because their bottom-up sales model has infected 95% of the Fortune 500, essentially letting the users do the enterprise selling for them.
That is a perfect summary. It is a structural advantage, not an accidental one.
And meanwhile, Adobe is sitting in harvest mode, relying on price hikes and AI upselling to keep that 10% growth moving while sitting on a massive mountain of cash.
A very comfortable position for them, but perhaps not an exciting one, and certainly not one that suggests 40% growth is coming back anytime soon.
So what does this all mean for you, the listener? Maybe you aren't a UI designer, maybe you aren't a software investor. Why should you care about this battle?
I think the broader lesson here is that in the software world, cloud native isn't just a marketing buzzword. We hear it all the time and roll our eyes. But this case study proves it is the literal difference between 10% growth and 40% growth.
Right.
It is the difference between organizational friction and flow. If you are looking at tools for your own company or looking at where to invest your own career capital, you have to look at the architecture. Is it built for the way we actually work today? Synchronous, collaborative, fast. Or is it adapting from the way we worked 20 years ago?
That is a great takeaway. It's about the DNA of the tool. Is it a digital drafting table or is it a digital whiteboard?
Exactly.
We want to leave you with one final thought, something to mull over that we didn't fully explore.
We talked about how Figma and Adobe are trading at nearly the exact same price to sales multiple right now, about 11x and 12x, but Figma is growing 4 times faster.
Right, the Ferrari versus the sedan.
So here's the provocative question. How long until the market realizes it might be fundamentally mispricing the harvest versus the growth? Is a market currently underestimating the value of pure compounding speed? Because if that gap in growth continues, if Figma keeps compounding at 40% and Adobe stays stuck at 10%, the valuation simply cannot stay this close forever. Something eventually has to give.
Ooh, that is definitely something to think about. Either Adobe has to crash, or Figma has to rocket, or maybe the market knows something about AI commoditizing design that we don't. I guess we will have to watch the next earnings reports to find out.
Indeed we will.
Thanks for joining us for this deep dive into the design software wars. We hope you learned something new about what makes these giants tick.
Catch you next time.
Don't forget to like, share, and subscribe for more.